Hello everybody and welcome to the channel. So in this video, I am going to show you a beginner gold trading model. Now this is based on my two-step model. On the screen, you can see my two-step model, step by step. As you can see, there are 5 steps. So what I'm actually going to do in this video is build each step as live as I can. Now, today is Thursday. We do have CPI data coming out tomorrow. So there's that context behind it. I am doing a gold series. So there's a series of videos where I do a daily commentary. Okay, these are mainly for fun, but they integrate the two-step model. Now, if you've been watching the video, you would know that I'm basically short biased. So on the left, let me just quickly explain the context and then explain what we're doing. So I'm just going to make this really tiny. Okay, so I've got 5 minutes on the right and I've got the 4 hour on the left. Now I mainly use the higher time frames. So the 20 hours time frame, which is a proxy for the daily. And then the lower time frame to that is the 4 hour or the 1 hour. Okay, so bear in mind this is part of my sort of steps to implementing the two-step. So let's just start from the context level. First, on the higher time frame, we have a two-step, this swing high or this swing high, doesn't matter, and this swing low. I take a fib and run this. Okay. Now, this is my range one, which is this. Okay, it's a directional range. It's a swing point, and then we have a directional range. This point, which is, you can label this point A to B. Now, this point to this point is my range 2. So this is my retracement leg. Now, what I want to see is price go into the 50 or 70 fib level. Now, I use all fibs, disclosure, but for beginners, I say use this level because this is your time box. This not time box, this is your kill box. So this is where I'm hunting for trades between the 50 and the 70 level. So you can use this point or this point. Okay, so any one of them is good. Now, so you have step one and step two. You know where to hunt for trades. Okay, and the next step, we're going to do this together, is the step three and step four. So we're doing two things at the same time. Firstly, at that level, we are looking for SMT and fair value gaps. So these are the two main ones. You can also look at volume, but SMT and fair value gaps are the two main ones for beginners. What does this mean? What this means is you have an overlap between your kill box, where you take your trades, and your checks, which is your fair value gaps to the left, and SMT. So this is gold. This will have SMT on the same time frame with silver, so the higher time frame. In your case, it might be the 4 hour. I use the 20 hours um, and a 4 hour as my lower time frame. So you need two time frames, and you need to be watching two securities that correlate with each other. So if you're watching ES, you're also watching NQ. If you're watching EU, you're also watching GU. So now that we've pretty much done most of the steps, the last part is just the trade management. So I want to take you back to this bit, which is the reversal. Now we do this on the lower time frame. So bear in mind that the 20 hours is my higher time frame. So I go to the 4 hour, which is my lower time frame. Now, what am I expecting to see here? Exactly the same thing as I see on the higher time frame. So What do we have here? We have the same direction, range 1. And what do we have here? It's a retracement, range 2. So I take my fib, running from this high to this low. Okay. What is this? 50 to 70. That's your kill box. So what that means is I have actually gone short again. Now, if you've been watching the series, you know that I was already short from this high, but I've now added to my position inside this kill box. My stop loss is above that high. Yes, I'm aware CPI data, but I'm just following the steps. So we're inside the kill box, right? We're inside the kill box. Now, bear in mind, this is the lower time frame. So you can be a little flexible. Okay. Now I say to beginners, always use the 50 to 70 on both time frames, but I personally sometimes will even use the 30. Again, it depends on the context and the time frame, but usually it's on the lower time frame. So if price is moving really quickly, it may just go to the 30 and then reverse. If price is just doing a normal thing, it would always go to the 50. This is why I put in the steps 50 to 70. So I am taking an entry here. All right. Now, what I'm going to do is pause the video and then come back a little later on. It might be a couple of hours because this is a 4-hour chart, just to see what's basically happened. Now, like I said, my stop loss is above this level, and uh, this is a lower time frame. So I'm putting my stop loss above here because that's kind of where my original stop loss is. I do say when you take your entry closer to the 50, you can use any candle to the left, use it as a stop loss. So you can take this candle, take the high, and put your stop loss above that. The only thing, and the reason I'm putting it above this level, point A, is just bear in mind that price can move towards the 70 because it's allowed to. It just cannot close above the 70. Okay, so the lower time frame can go above the 70, but the higher time frame can't close above the 70. So if you're using the, in my case, the 20 hours time frame, it cannot close above the 70. So that's why my stop loss is above point A. But but those are the steps. So what I'll do is pause the video and come back after a couple of hours. Hopefully the video doesn't break, and then we'll kind of see where we are in general. But what I'm hoping for is for price to come back and swing past this swing low to basically confirm the bearishness. That's what I'm hoping for. So see you in a second. All right, we are back. So I just had to wait a little bit. We now have a, well, it's not closed yet, but we had this 2-bar reversal. So as you can see, this is happening inside the kill box. Okay, so it's the same, where is it? It's the same model, right? It's step 2, retracement into the 50 to 70. That's where the opportunity is. It doesn't mean it's going to be correct. It's just if you are going to do anything, that's where the opportunity is. Um, that's really it. The model is very simple. It's 5 steps, very easy to follow. I'm doing a daily commentary on gold. So we have CPI tomorrow. We don't know how it's going to react. My bet is that we are going lower, even if we may spike up a little bit, but we are overall, I think, going lower. Again, I could be completely wrong. But thank you for watching this video. If you got any insights, you like the model, you want to see it again, please like the video, subscribe to the channel, and I'll see you in the next video.